Cutzler YMX uses the Netrodyne two-way camera system in all of our power units. The Netrodyne cameras have more than once exonerated a driver who was perceived to be at fault, as well as saved our Cutzler YMX from paying damages related to an accident. We are already seeing, just in 1 year of Netrodyne, the impact of better safety scores and fewer damages and incidents in our insurance rates.
And welcome into this week's Freightonomics, where we can combine freight market intelligence and economics into something. I'm Zach Strickland, Director of Freight Market Intelligence here at FreightWaves. Tony Mulvey, Senior Analyst. And, you know, it's this time period, and I think is one that we all kind of thought was going to be a little bit more volatile, especially considering the fact that we have a major landfalling hurricane looming at the time of this recording. If you're listening to us later, you'll have already felt the results. More than likely, or you're already feeling the results, and it will be important to monitor because a lot of times these disruptions. You know, Kaylee Nix was on an episode with me when you were off in Ireland chasing leprechauns, and we talked about how a lot of the times the impacts aren't necessarily felt right away when you have these major natural disasters. Like, a lot of it's done after the fact. So this upcoming week will be the determining factor. Although I don't know that we have any data that suggests that this is going to be one of those situations yet.
Yeah, I mean, the way I see it, and we're going to touch on it a little later, is just like where it's making landfall is not, it's not really impactful. It's not like hitting Houston directly, right? Or New Orleans directly. I mean, even we saw one a few weeks ago hit New Orleans or just west of New Orleans, and wasn't that impactful overall. But you've got multiple things happening in the freight market, not just one.
The ILA strike, of course, set to hit next week or this week, depending on when you're watching this show. And of course, this is probably the single most discussed topic of concern in supply chain economics at this point, and rightfully so. So we will cover a few of those things, get some updates there. Mike Bowden-Distel was kind enough to lend his voice to some of the the narrative there. But
good. But first, we've got to say thank you to Netrodyne, our sponsor. So remove the guesswork from driver management and fleet safety and start predicting your accident reduction cost savings. Netrodyne's AI-enabled video safety platform corrects unsafe driving habits, recognizing and reinforcing great driving. With the Green Zone score, your fleet of engaged drivers will protect your bottom line. Every 50 points earned is a 14% cut to your accident rate.
Yeah, and be sure to check out last week's Freightonomics, where we were able to discuss some of the dynamics of that. And in this, I don't know that it's a challenging recruiting environment for drivers, but it is. I don't think it's ever easy. When you are talking about driver management and driver safety, of course, always a topic of concern for carriers.
Oh, absolutely.
And their legal teams.
No doubt about it. But Zach, I think before we kind of get into discussion around ILA and the hurricane, kind of setting the stage where the market is with the market in two. So Zach, I'll count you in.
Do it.
3, 2, 1.
All right. The National Outbound Tender Rejection Index, the percentage of loads that are being rejected by a carrier from their shippers, and it's pretty low. We actually had a little bit of an uptick there as we were approaching the end of the quarter, end of the month, but then that has somewhat resolved. Not a lot of volatility here, not a lot of movement. If you look at last year, we really had a disappointing end of quarter last year as well from a carrier perspective, because just not a tight environment. Typically, end of the third quarter is one where we see some volatility, especially in rejection rates and volumes. A lot of shippers pushing stuff out. I think a little bit of pull forward activity has mitigated that. October, not necessarily a month of volatility either. So I would not expect this index to really percolate until minimum November. If we go to the next chart and break this down into the refrigerated side of things, as well as the van rejection rate there in the white on the bottom, refrigerated tender rejections have come down significantly over the last bit, but their trend line is still up. So the refrigerated market isn't what I would consider in the same line of thought as the van side. Refrigerated rejections are elevated. They're still trending higher. If you look at kind of an imaginary line on the bottoms of these charts, you can see one is moving in a downward direction, the van side, and the other one is moving in an upward direction since the middle of the summer. So that's probably the way that I would read this, is refrigerated continues to be one of somewhat concern, although the near-term indicators are that that's going to diminish a little bit. Spot rates in the next chart here. Just pulling this up, refrigerated spot rates, you can see them collapsing almost in sync with the rejection rates there at the very end of the chart on the top. And then, of course, van spot rates look very similar to the rejection rate chart as they slowly deteriorate. No upward movement in the spot rate from the van side thus far. And last but not least, let's look at the OTVI demand side component. Not an end of quarter push. You see that big sharp drop there at the end of the month.
Yeah. What do you take away from that?
I'll say this. It's
hurricane
unusual.
/ ILA related? Like,
I think we do have a little bit of pull forward activity. I think people were a little bit more in front of things this year, and there's really no sense of urgency around the end of September naturally. Like, you talk about holiday stuff from a retailer perspective, there's really not a lot there. It's really more about like manufacturing, order completion, recognizing some of that revenue in a quarter, from a company perspective. And end of September really isn't that. We normally see about a 3% increase in volumes at the end of the month in September, but the last 2 years, I think COVID has broken a lot of things. Yeah. And I think that's one of the trends that it may take some time for it to return.
Yeah, I don't disagree. I think it's interesting when you start looking at some of the data, like we've talked about it from a spot rate perspective, even like May being kind of the bottom, early May.
Yeah.
And then rebounding, like we're testing those May lows. I mean, we're just a few cents above those May lows. Like, it's not where I thought we'd be right now. I think mid-August through now has maybe been a little worse than I thought it was going to be. I didn't expect it to get better necessarily, but I didn't think we would see this kind of degradation from
volume has been high for most of September, but it's short haul volume. Yeah. I think if you've heard me talk about the mixing of short haul and long haul, we've seen a divergence there in terms of growth and short haul volume. And when I say short haul, I mean loads moving less than 250 miles away from their origins. And a lot of this, of course, if you listen to Dr. Zach Rogers, we've got a lot of upstream warehouse management activity. All that freight that's coming in through the ports, getting shoved into upstream warehouses. We've got some manufacturing inventory buildup going on right now. So that's a lot of that local freight that moves intra-city. Dallas to Dallas, Dallas to Fort Worth. You've got Los Angeles to Ontario. Yeah. A lot of that freight volume, which really doesn't disrupt capacity. I've always made the argument that we probably should create a length of haul tender volume index so we can mitigate the influence of the short haul in the tender volume, because it really doesn't have a huge influence on capacity.
Because it doesn't really take capacity out of a market, right? If you're moving 250 miles, even if you're going from LA to, call it, the edge of California, even into what we call the Phoenix market just across the border, like, odds are that truck's getting back to LA in the same day.
Yeah. So I have created with our Excel add-in feature the length of haul tender volume index for my own purposes. And looking at that, we're actually a couple of percentage points down in terms of total volume and what I do. And for those of you that have the Sonar Excel add-in, you can do this calculation on your own. I just weighted each tender length of haul wise, so LOTVI times 2, because it takes at least 2 days to cover a long haul tender. And then if the city haul, the local haul, less than 100, I gave it a 0.2 weighting. So just think about it in terms of, the time it takes to travel and cover, and weight it appropriately, and you can make your own length of haul tender volume index.
Absolutely. It's definitely interesting to think about it that way. Really? We'll shift gears here real quick. I mean, look at econ data, economic data. I mean, this week it's
Not
the
as-
end of the week or end of the month, like typically very soft from a economic release standpoint. I mean, the only one of note that I found interesting was looking at kind of orders that came out this week. So you had non-defense capital goods, excluding aircraft. So kind of a proxy for, I'd call it consumer freight orders upstream.
Well, it's durable goods.
Yeah.
And that's freight.
Yeah. So
Yeah.
up 0.2% month over month, but it was better than expectations.
Yeah.
Those were at 0.1. Then if you look at durable goods, new orders, flat month over month. There was an expectation of a drop of 2.6%. So that is a positive sign from my perspective. And if you exclude transportation from that, up 0.5% month over month, better than the expectations of up 0.1%.
Yeah,
So,
the read here is that I think we had at least some influence from the rate cut.
Yeah.
I don't know how much. It's hard to quantify. This data is a little slow. And of course, the market's slow to react to some of these things. But I think the fact that we're beating these estimates from a durable goods perspective, like I think orders now become much more important in monitoring versus where we have been, because we know, we've talked about it on this show.
Yeah.
Like people have been sitting on CapEx, waiting on the rate cuts that a lot of people thought were going to happen in May.
Yeah.
And so you've got like a 3 to 4 months that maybe they were sitting on these budgets, and now we're getting to the end of the year. This is the one economic thing that everybody should probably pay more attention to as we end the year. Everybody's going to talk about retail, and retail obviously matters more than anything towards the end of the year. But the manufacturing, the capital expenditure stuff that comes from construction activity, even though we're out of season, I don't think it's going to be a huge influence, but this could be something that adds to the disruptability of the freight market.
Yeah, it's been one of the areas that's lagged behind. I mean, the economy as a whole really has been driven by the consumer in recent years because of elevated interest rates, right? Like manufacturers don't go make big investments I mean, companies as a whole really don't make big investments when interest rates are high. Lower interest rates drive some of that investment, more investment into things than not, instead of holding cash or investing that in other ways to generate returns, they'll invest it back in the business. Guess what? That's where it really, I look at OTVI and look at how much it is up year over year, with really the industrial side of the economy not adding anything to that.
Nothing at all. And that's an invisible demand side factor that we have to be cognizant of. I think the retail side is going to have more influence than any of it. I mean, but all signs are pointing to consumers being okay. I know we've got some weird labor numbers that nobody really trusts anymore. And certainly in the transportation space, which a lot of our viewership is, we're in the midst of our own long haul recession in terms of that space from the transportation service provider component. And a lot of companies too, I think, aren't necessarily doing as well as some of these aggregate figures. We talked about it since COVID. We've had this disparity of experience throughout. You know, normally we have everything kind of moves together before COVID. Now we've seen, sectors and then sectors within sectors, like the retail sector, for instance, the electronics component.
Yeah, and furniture's like been terrible.
Yeah.
Like
they had this boom in the middle of COVID where everybody was staying at home. And then all of a sudden, at the end of COVID, nobody was redoing their houses and ordering electronics anymore. And so they've had their own economic bubble burst, just like the transportation sector. And then there's the tech. There's a little bit of a tech component to it as their customers go. So does the tech as well. So there's a lot of disparity and noise in the aggregate figures. And I've harped on this before. Really focus on some of the details in some of these figures, because the aggregates don't give us, I don't think, a very good complete picture.
Yeah, no, absolutely not. But
well, let's move on to the stories of the week, which are once again dominated by the ports, ILA. The first story up here: longshoreman port strike unlikely to hinder holiday retail season, expert says. So, I mean, we've seen it in the data. Like we've seen the IOTI and we've seen OTVI upstream. Like there's obviously some level of pull forward here that we are very, very certain is occurring.
And I think that's occurring for a couple reasons. One, it's well known that this was a potential risk.
Yep.
I think that's really why you would believe this. Like, it's not going to hinder it, only for the sole fact that it's been talked about. We've talked about it on here for, it feels like 2 months in a row. Like, if you're making these decisions, like, you knew the risk probably when you were placing these orders, if not earlier.
That's why everybody's asking about it. They're trying to figure out what to do to get in front of it. And guess what? They're going to do something. And what they do, the best thing you can do is build up your inventory level. You know, and get it away from the port.
So one of the quotes from the story, it basically says, retailers have been forward stocking, expecting this. Now, will that take care of the whole season? I don't know, but it wouldn't be the same as if they hadn't prepared. So that was Rob Liebman, chair of McCarter and English's Transportation, Logistics, and Supply Chain Management practice.
Yeah, I mean, I think Craig Fuller, our CEO, alluded to this numerous times on the State of Freight, where it's like, listen, there's only so much you can prepare for. There's always going to be something that people miss. And those are the things that are going to be the things that spark the holiday season rush. So I think this isn't going to help supply chains by any means. There's only downside risk here.
I think my question would be, if you were preparing for this, but you thought, hey, maybe the administration will step in to some point because they know how big of a risk it is. But it clearly seems like they're not willing to touch this right now until it becomes an issue. And then it was, I think Sea Intelligence put out estimations, right? That a one-day strike will take basically 5 to 6 days to clear at the port. But if you get into a week, you're talking kind of mid-November. 2 weeks, you're pushing that into 2025. Like, those things that you were hoping maybe to come in for November, like you were trying to push them as late as possible, are going to miss the mark. And I think some of that, I don't know how well you can prepare for things like that. Like, you're preparing for this to happen, but you don't know the magnitude of what's going to happen.
You're sort of taking that component of rail intermodal out of the equation if we do have a significant downshift here, at least on the East Coast. You know, and I don't think rail has a huge influence there necessarily. It's been largely the West Coast derivative. But Mike Bowdendistel actually provided some commentary here. Main question is whether the Biden administration will intervene or whether it would allow the strike to drag on. They reportedly say they wouldn't, per Reuters last week, even though the Biden administration reportedly said it wasn't going to invoke Taft-Hartley. There is precedent for doing so. Bush did it in 2002 to stop the ILWU strike on the West Coast. If the Biden administration were to invoke it, next steps would be workers going back to work during the 80-day cooling off period, and then they would continue the negotiation process. And then assuming there's no agreement after 60, 75 days, the USMC would submit its best and final offer to the National Labor Relations Board. So then it would go to a board, vote on it if acceptable. Attorney General and President and Congress could potentially take action, but that's a big unknown. And with him saying that he's not going to, I think that's the question is Biden going to stick to what he's reportedly said?
Yeah, I think that's the question. I mean, because on the surface, going back to the article, I mean, you start digging into the comments. I mean, I think the one that, quote, I think the threat of a strike is very real. I think ILA President Harold Daggett wants to strike. I think he has a reason to want to strike from his constituents' perspective, right? Like, you look at what happened with the UAW, you look at ILWU, you look at the Teamsters threats, like it's favored labor unions by having these risks. I think what's interesting is really why the union or why the president wouldn't step in here is they're pretty pro-labor. Them stepping in kind of says maybe not so much.
Well, it depends on how many votes this represents. Like, do the unions have the majority of the votes in their representative, organizations to really move the needle on some of the swing states? And that's the thing that they're calculating, on the back end. And I don't know that that's true. In my personal opinion, I think there would be more damage to an economic downturn. I don't care who you support. Yeah. If the unions were to be on the side of some sort of economic damage, the population will go against that. Yeah. And that's always bad for an election. Oh, 100%. So I think the logic of maybe the president reportedly said he would not intervene, but the reality is he will certainly have to strongly consider it depending on the economic fallout.
Yeah. So I will say there's been an update this morning. So the USMX, so the U.S. Maritime Alliance, is seeking a National Labor Relations Board injunction, but it doesn't necessarily affect the strike. So that's what's interesting. It's like they're trying to do something. Yeah. But it's the actual fallout or the impacts, if that injunction's granted, don't actually, all it does is bring them back to the negotiating table to some degree. It doesn't affect if they would strike or not. Next Tuesday?
Yeah, next Tuesday, October 1st. So the next story, ports detail strike contingencies. Certainly a good article to read here by Stuart Charles. The Georgia Ports Authority will open truck gates this weekend so shippers can retrieve cargo before October 1st at its Garden City terminal, Port of Savannah, of course. And then it will accept exports, including refrigerated containers, until Monday. Now, there's some of the rub here is some of this freight, refrigerated containers, they will not be monitored if the strike does undergo. So there probably is a little bit of sense of urgency sitting around whatever's going to be around the ports, certainly into next week. But it's going to be orderly as far as they report until it's not.
Yeah, right? I mean, the problem is when it becomes right now, it seems like, I don't want to say it's a next week issue, but it feels like people are pushing it out until, the last second. And then, what's going to happen when, I look at Walmart because, they utilize the Port of Houston significantly, and they're the country's largest importer. What happens when they come Monday, they think the strike's going to happen. They're like, we need all of our freight. There's going to be, that's where I think the congestion really could pile up quickly, is everybody goes, they're waiting to see what's going to happen. They realize that, hey, maybe an agreement's not going to become to in the next couple of days, and we've got to get our stuff out of the port so we have not even just so we at least control the destiny of it, not relying on a labor negotiation.
Yeah, and this is what kind of shocks me about the lack of volume responsiveness in the OTVI. Yeah. Knowing that there's been a lot of local freight moved, are they just willing to let it sit they don't expect the strike to last for any period of time? Yeah. They're going to let that freight sit around the ports or in some of the warehouses. And maybe they're okay with that. I don't know. That's the big question. Is this feels like a thing that we don't have a clear understanding of in the near term, because we don't know how the difference between a day shutdown and a week is significant.
Yeah, it is. I think you start looking at some of orderly shutdown on Monday at Port of Virginia. So all of the different terminals there. Then you go down normal business operations leading into Monday at the Port of Houston. So highlighting, I think that one's one of the interesting ones because it doesn't just affect the container port. No. It affects
anybody, even bulk. If you don't have moving a container, you've got all sorts of, and of course, as you were about to say, the manufacturing supply chain is way more influenced by any kind of disruption than the retailers and people that are shipping containers. And there's downstream impacts of that. That sucks up capacity, it sucks up resources in other ways that are unseen that could have some sort of impact. But on top of that, we've got a major hurricane. Helene, of course, bearing down on Florida today and in the past, for those of you watching in the past. And so the deal here is I don't know that there's going to be a significant impact of Helene on the direct coast of Florida where, for a hurricane to have a big impact, it's got to disrupt infrastructure. Yeah. Where it's landing, not a lot of infrastructure.
Yeah.
It's a vacation area.
That's definitely the positive sign. I think then you start looking at the track. I think we have it actually
let's
up here.
Pull up the track here as we...
I mean, Atlanta is underneath it. Now, granted, it's going to lose some steam by the time it gets there, but...
Atlanta is the second single largest freight market in the United States. So when you involve these huge markets, Houston is a huge outbound market in the United States. It is not this number 2. And when that market gets disrupted, the whole nation, the national supply chain breaks down. So if, that they're expecting somewhere around 10 to 12 inches of rain total in Atlanta, the Atlanta metro area, public schools are out today. In, anticipation of this, some shipping, manufacturing is bound to be disrupted by this.
Yeah.
The level of which I'm not sure. However, I've been looking at our OTRI data, the outbound tender rejection index and inbound tender rejection index for the Atlanta market. And there is a strong divergence that has been occurring here before the hurricane, mind you. But we see, the inbound tender rejection index is in white. So that's the percentage of loads being rejected going into the Atlanta market over the last 7 days. And you see a big spike there. A lot of carriers avoiding going into Atlanta. However, the outbound tender rejection index dropping quickly as everybody tries to leave the Atlanta market.
What this does is leaves the market exposed when things come back to, because capacity will be gone and there's not capacity coming in. Now, that said, it's such a big market, carriers will come back to it, but it leaves other areas exposed too. So it's not just like this is where you said it's really not even leading up to or the day of the event. It's call it 7 to 10 days after that are really the impactful ones. Because, if you think about it, like these carriers that are exiting or trying to get out of this path entirely, they're not going to come back in until it ultimately is clear. And it's, how long does it take to get back in, right? It's not going to be, most of the time, maybe a day, maybe 2 days, but if you shut down manufacturing facilities as well and the like that takes some time to ramp back up too. So it's not as easy as just like turning the lights off and on and they instantly turn back off. They turn on and off instantly. Like there's a ramp up that takes place. So
yeah, and this is the end of the quarter, end of the month in Atlanta. So I know we talked about volume not really being a thing in aggregate, but come Monday, because technically, it's Thursday today when we're doing this, potential for them to lose operational functionality on Friday. So they're going to lose a day of shipping, and it'll more than likely be done with by Monday, which means they can resume operations and recover. So missing a day, I don't know that it's going to take a huge amount of effort to get back.
I would say the fact that it's making landfall Thursday evening / Friday, and then moving up, call it Friday. Timing wise, maybe best case scenario, because you're not disrupting it, say, in the middle of the week.
Well, the urgent freight ships on Friday.
There is that.
So there's somebody that's getting significantly impacted by this. Yeah. It depends on how much volume. And the fact that it is the end of the quarter, end of the month, means that there's somebody that is having a really, really bad time right now, more than likely, trying to get their freight out. It just doesn't look like that's appearing en masse at this point.
Yeah, I mean, we can go back and look at what we talked about with Francine, right? Yeah. Like it just was kind of nothing happened with it. But again,
it didn't influence a lot of big markets.
It missed. New Orleans isn't a big outbound freight market. It's a consumption center. So really, you're only along the Gulf Coast. Really, you only have Houston, and then you have Atlanta that can be impacted based on certain tracks. Yeah. But so this one's far more impactful, likely to be more impactful than Francine was, but we'll see the extent of that really next week, I would think. I mean, end of next week.
And of course, Atlanta is tied to the Savannah market, and the port structure there. Of course, Savannah not a part of the ILA technically, but they are expected to, have sympathy walkouts in support of their union brethren there. So it's not a straightforward picture. Bottom line is, watch Atlanta this week, watch Savannah this week. There's some potential risk to that portion of the supply chain domestically, and I mean It's not going to be known until it's known.
Yeah.
There's all sorts of speculation that we can put into it, but watch the data, watch the numbers. You'll see it pretty quickly, more than likely.
Yeah, absolutely. I think there's going to be a lot to pay attention to over the next 7 days.
Yeah, I know. And it's just crazy to me that we haven't had the responsiveness that in front of this one. It feels like two big things that aren't really making,
Hey, that's what happens. It comes, but bad things come in threes, right? So what else is going to pop up between now and next week?
We'll see. Good luck and have a